Good morning, I'm Peter Milios from the Finance News Network. Stocks fell on Monday as Treasury yields spiked higher on concerns that the Federal Reserve may not cut rates as much as expected. Lacklustre results from McDonald's also dampened investor sentiment. Overall, the Dow Jones Industrial Average dropped 274.3 points, or 0.71%. The S&P 500 slipped 0.32%. The index hit a record high last week as big tech stocks moved higher. The Nasdaq Composite edged down 0.2%. The yield on the 10-year Treasury note was last up more than 13 basis points to 4.168% as investors assessed a fresh batch of strong economic data that suggested rates may stay elevated for longer than anticipated. The benchmark yield traded around 3.81% last week. Fed Chair Jerome Powell on Sunday reiterated comments made after last week's January policy meeting, suggesting that a rate cut in March was unlikely. Expectations for cuts have eased since the remarks, with the probability of a cut next month last at 14.5%, according to CME Group's FedWatch tool. Following these comments made by the Fed chair, the US dollar reached its highest point in approximately 3 months. Against a basket of 6 major currencies, the dollar strengthened by up to 0.7% on Monday, reaching its peak level since November 14th. Earnings season stretched on, with McDonald's slipping 3.7% after posting a mixed quarter. The results heightened concerns about earnings from companies outside of the technology behemoths and whether they can deliver the rest of the season. Elsewhere, Boeing slumped 1.3% on more 737 MAX woes. Tesla also dragged the broader market, losing 3.7% as worries over rising competition and persistent pricing pressures for the EV giant lingered. Caterpillar is on track to achieve an all-time high in its stock price after reporting strong fourth quarter earnings, including improved profit margins. They announced an earnings per share of $5.23 on $17.1 billion in sales, compared to $3.86 per share on $16.6 billion in sales the previous year. Small cap stocks, as represented by the Russell 2000, exhibited underperformance in Monday's trading session, experiencing a 1.4% decline. This underperformance is part of a broader trend, with small cap stocks having declined by over 4% since the beginning of 2024, in contrast to the S&P 500, which has seen a 3% increase during the same period. In commodity-related news, analysts anticipate a rise in rare earth prices in the near future, driven by increased demand from electric vehicles and wind power. Additionally, China's output quotas are expected to grow at a slower pace this year, following a substantial 21.4% increase in 2023, as China plays a dominant role in both rare earth mining and refined output, contributing to the decline in rare earth prices observed in 2023 due to heightened production and tepid demand growth. Shifting to US sectors, only tech and health closed higher overnight. Materials and utilities were the worst performers. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.4% fall. Thank you for listening.